welcome to our channel. First of all, like my video and subscribe my channel for more informative videos. So, the $100 million the portfolio strategy used by wealth manager. Why, where, what, which? It's the questions of that start in your mind. So, private assets for wealth management clients. Why and why now? So, wealth managers are allocating more clients' capital to private assets. We'll look at the reason. So many are doing so, and especially why they are doing it now, and many more questions is in mind. So, private client wealth manager have held robust arguments for allocating to private assets for some times. By 2021, 4 in 5 UK wealth managers had invested a portion of clients' money in private assets. So, these allocations are typically made in pursuit of enhanced performance and diversification. Arguments that historic data continues to support, but other factors is diversifications, an argument that the historic data contributes to support, but other factors such as the emergence of the new vehicles of private assets investors and the declining number of publicly quoted companies. And you can see it's some examples that you can work a number of publicly quoted companies and are drive out of the major themes unfolded like artificial intelligence and the renewable energy transition. Many requires private capital backing. So, how robust are the returns and the diversification arguments and past performance at their miracles and investment types like traditional equities and bonds over longer investments or horizons. So, it performs like the comprehensive between the private and liquid assets classes strategy as years 5, 10, 15, 20 years. So, it's a private equality. So, in private equality is venture capital and real private data and funds secondaries and your Morningstar's Global, MCI, World Small Cap Growth, Morningstar's Global Real Estates, and Morningstar's Real Assets and Monsters Global High Yields in front of you. So, here's the firstly private markets also have a history of performing differently to liquids market, mirroring how must investments move relative to another. So, the correlation is crucial to creating the meaningful diversification. Again, data indicates that private assets can contribute to portfolio diversification. So, correlation between private and liquid assets for the period in 2014 and 2023. What the number means? So, a correlation of 1.0, technically the correlation coefficients means two assets move in exactly the same way. Smaller number indicates lower correlation. Investing in private market can be effective ways to diversify our portfolio, as these assets tends to have a lower correlation with public markets and allow them to move independently, and that the happening. So, I can see that the independence provides the diversification benefits and more ever in the priorities. So, be carefully. It's very and your work and your other completion argument and a key reason why investors are increasing allocation to private market and you're growing at a pace. Option in public market have continued to narrow. So the number of listed companies has been falling for years, and not just the UK. The trend has been cost and work is in. So, the number of listed companies has been falling for years, and not just in the UK. Trend has been cost in major around the world. So, it's very easy to find it, and it's very easy to for falling in years, and not just in the UK. In 1996, it's the number of listed companies and your work and the number of the listed companies, and has been falling for years, and not just investors are increasing allocation in the private market. Is it while not just in UK the trend has been cautious in major market around the world. So in 1996 there were over 2,700 companies on the main market of the London Stock Exchange. At the end of the 2023, this had collapsed to 1,100 or 60% reduction. That has been trends, and it has been at the end of the 2026 in your work. So you can see the reduction that has been your work and your reduction. So Germany has shed nearly 50% of its public companies since 2027, and it's of the London Stock Exchange at the end of 2023. This had collapsed to 1,100, a 60% reduction, and there have been a 75% fall in the number of UK listed companies. And since it's your work that you can see the London stock and your collapse to the work, there has been 23 public companies and US experience and dividing portions for the proportion and corporation stocks. And this is not just the UK issues. So it in the users, for examples, and same examples that you see, and ordinary servers is here's the direct the opportunities to the directly in the rest. So it's very easy to see. This is not just the example of ordinary server as largely has deprived of the opportunity to invest directly in the most. So next we have investors who focus solely on the stock market are missing out on a large and the growing part of the global economy. So where investors will need to explore private assets options to capture the growing private investable universe. The ZN is another powerful reason for investors increasing interest in private market allocation. So new investments vehicles offer institution-style private assets explorer for wealth manager and their client. So the above explains the attractions of private assets of the both advisor and their client. But what about why not? What he changed? And even for those who private market allocation and overall share the portfolio remains low. The Investments Association used to fund the private market investments comprised on average and UK wealth manager assets under management in 2021. Private investors. In private investors, you can see is the half of the global wealth, but they account for just for 16% of private market investors. The highlights for the level of the underweight of the assets class in their portfolio versus institution counterpart by comparison, our search indicates the global institution investor had allocation on average 40% of their portfolio to private assets. The discrepancy is in part because the institutional investors have had assets to a much broader range and the range of the solution and individuals that can be on research, and it's not about by comparison of our research is indicates that the global institutional investors allocated on average 40% of the portfolio to private assets. The discrepancy is in part because institutional investors institutional investors is UK regulars and in the regularities, LTA fees, structures, and were initially designed to put the passion option of the UK authorized funds ecosystems, providing another access points to the private market for investors, are complementary to exciting private asset structures like the investment trust, offering new flexibility in how UK investors will be able to meet their objective. We are private market investors. So it's examples that consider growing numbers and consideration for UK private client business providing private market assets to the client. So I hope you understand. Thanks for watching this video. Like my video and subscribe my channel for more informative videos. Goodbye.